Most investors in 2026 are still chasing the same popular assets. The same big tech stocks. The same headlines. The same hype. But smart money doesn't always move where attention is. It moves where opportunity is overlooked. Right now, there are investments most people are ignoring. Not because they are bad, but because they are unpopular. And sometimes, unpopular assets create the strongest long-term returns. In this video, we'll break down 5 overlooked investments smart investors are quietly watching in 2026. No hype. No gambling. Just calculated opportunities. The first overlooked investment smart investors are watching in 2026 is global infrastructure. While most attention goes to flashy technology stocks, infrastructure quietly powers everything behind the scenes. Roads, data centers, renewable energy grids, ports, logistics networks, and digital communication systems form the backbone of modern economies. Governments across the United States, the United Kingdom, and Europe are increasing infrastructure spending to modernize aging systems and support economic growth. This sector does not usually generate headlines, which is exactly why it is often overlooked. Infrastructure companies tend to produce steady cash flow because their services are essential, not optional. Whether the economy is booming or slowing down, electricity must flow, goods must move, and internet traffic must operate. Investors can gain exposure through diversified infrastructure ETFs or companies involved in energy transmission, transportation networks, and data center development. Infrastructure is not exciting, but it is resilient. And in uncertain economic conditions, resilience becomes valuable. Smart investors understand that stable long-term demand combined with government support can create steady performance without extreme volatility. That combination makes infrastructure one of the quiet opportunities worth watching in 2026. The second overlooked investment smart investors are watching in 2026 is commodities, particularly strategic metals and energy resources. While many investors focus only on stocks, commodities often perform well during inflationary or uncertain economic periods. Metals like copper, lithium, and rare earth elements are essential for electric vehicles, renewable energy systems, and advanced technology infrastructure. At the same time, traditional energy resources continue to play a crucial role in global supply chains despite the transition to cleaner alternatives. What makes commodities overlooked is that they often move in cycles, and when they fall out of favor, investor interest fades. However, long-term demand driven by industrial growth, urban development, and energy transformation remains strong. Exposure can be gained through commodity ETFs, mining companies, or diversified resource funds rather than speculative single bets. Commodities provide diversification because they often behave differently from traditional stocks and bonds. In a world where economic conditions can shift quickly, having exposure to real assets linked to physical demand adds balance to a portfolio. Smart investors do not chase commodity spikes. They position themselves patiently when valuations are reasonable and long-term demand trends are clear. The third overlooked investment smart investors are watching in 2026 is cybersecurity. As digital transformation accelerates across the United States, the United Kingdom, and Europe, cyber threats are increasing at the same pace. Businesses, governments, and financial institutions are more connected than ever, which means data protection is no longer optional, it is essential. While flashy AI companies dominate headlines, cybersecurity firms quietly provide the protection that keeps digital systems running. Every year, cyber attacks become more sophisticated, forcing organizations to increase spending on security infrastructure. This creates consistent demand regardless of economic cycles. Even during slowdowns, companies cannot afford to reduce security budgets because the cost of a breach is far greater than prevention. Investors can gain exposure through diversified cybersecurity ETFs or established firms that specialize in network protection, cloud security, and digital identity systems. What makes this sector overlooked is that it operates in the background, rarely generating hype compared to consumer tech. Yet the need for security only grows as economies become more digital. Smart investors understand that protecting digital assets is as important as building them, making cybersecurity a strategic long-term theme worth monitoring in 2026. The fourth overlooked investment smart investors are watching in 2026 is healthcare innovation, particularly companies focused on biotechnology, medical technology, and aging population solutions. Demographic trends across the United States, the United Kingdom, and Europe show that populations are aging steadily, increasing demand for advanced treatments, diagnostic tools, and long-term care solutions. While healthcare is often seen as a defensive sector, innovation within it creates long-term growth potential. Breakthroughs in gene therapy, personalized medicine, and AI-assisted diagnostics are transforming how diseases are detected and treated. Unlike trend-driven sectors, healthcare demand does not disappear during economic downturns because medical needs remain constant. Investors can gain exposure through diversified healthcare or biotech ETFs to reduce company-specific risk while benefiting from sector-wide growth. What makes this area overlooked is that biotech volatility scares many retail investors away, yet long-term demographic demand remains strong. Smart investors focus on the broader structural trend rather than short-term price swings. In a world where longevity is increasing and medical technology is advancing rapidly, healthcare innovation represents a long-term theme that may quietly outperform more crowded sectors in 2026. The fifth overlooked investment smart investors are watching in 2026 is emerging markets with strong structural reform and technological growth. While many investors focus only on the United States or Western Europe, some developing economies are experiencing rapid digital adoption, expanding middle classes, and infrastructure modernization. Countries investing heavily in fintech, renewable energy, and manufacturing upgrades may offer long-term growth opportunities that are not fully priced into global markets. Emerging markets carry higher volatility, which is why many investors avoid them, but selective exposure through diversified ETFs can provide growth potential while spreading risk. The key is not chasing speculative headlines but identifying economies with improving governance, stable policy direction, and expanding consumer demand. Smart investors understand that global diversification reduces dependency on one region and opens the door to growth beyond mature markets. In 2026, overlooked opportunities are not necessarily risky, they are simply outside mainstream attention. By combining infrastructure stability, commodity exposure, cybersecurity growth, healthcare innovation, and selective emerging market diversification, investors can build a balanced portfolio that does not rely on hype. The goal is not to predict which single asset will explode, but to position intelligently across long-term structural trends. That is how disciplined investors prepare for opportunity while protecting against uncertainty.